Okay, so in this video, I'm going to cover market structure. So we just think of market structure as a visual representation of what price is doing. So you would have just watched a video on market conditions. It's pretty much the same thing, but we're going to delve a little bit more into the structure in this video. So in the market conditions, I said the first thing you need to do when you're looking at a chart is identify what the market is doing, what the conditions are, all right? So is it trending? Is it ranging? And if it's trending, so we're going to use this one as an example, if it's on a downtrend, this would mean that you've got lower highs and lows. So if remember, price comes down, making this low, retraces, making a high, but it's lower than the previous high, and then obviously pushes down again, making another low, another lower high, and so on. So right now, this is a downtrend, all right? So you can see the structure of the market is kind of making these movements down with these corrections, okay? And it's important that you do this because you want to know whether you're looking to get in on the trend or whether you're waiting for a reversal. So what you would do with market structure is, after identifying it, you need to work out with your strategy, and obviously everyone's got a different criteria, but is this a trend that I want to get in on? So for example, you know that it's a sell that you're going to be looking for because it's going down. But say, for example, when you were looking at price, it was around here. You wouldn't just jump in after this move has already been made. What you would be looking for is a decent correction to then get you in at a good price, okay? And generally, the rule of thumb is if you're trading like this, if you do get in a pullback, so say, for example, price pulled down here, pulled up, and so you've got in off this previous support level for a sell, your stop loss would generally be where the previous high or low is. So in this case, you would put it either above this level here, or probably safer, above this high here. So you've got that high, you've got this high. So lower high, previous high. So if you were getting in there in a sell, that's where you would put your stop loss. And then obviously that's how you would do that. So let's say, it got to a level where you thought, actually, this has been going down for quite some time, and it's hit a major support and resistance level where people have bought previous. So you think, I've got an indication that this is actually going to reverse now and it's going to start heading upwards. So what you would do is you'd have to wait for confirmation. Okay, and how you would do that is wait for this structure to break. So you'll hear a lot of people say, break of structure. And one of the main strategies does talk about market structure, and there is a more detailed video on exactly what that is. This is basically obviously just the basics. So a market structure, a break of structure will look something like this. So remember, this is a downtrend, so it's bearish, sellers are in control. Now and it's got lower highs and lows. I'm now waiting for this to create higher highs and lows. Okay, so I'd be wanting it to do something like this. So price to push up above this high, and I would say above this one as well, yeah. Push up, creating a new high, a higher high, okay. Then break down, but not breaking below the previous low, so that it now becomes a higher low, okay. Sometimes it may come down, it may make an equal low, but as long as it's not making that lower low, and starts to reverse up, then you can assume that this is now reversing and making an uptrend. Okay, so you'd be looking for something like this. And of course, it won't look exactly like this, but just to give you a good example. So we'll go again. So we'll go from here and we'll go up. This has created a higher high. This has created a higher low. And then it's pushed right through, and you can see without a doubt that it's broke the structure now. So the structure was those lower highs and lows, and now you can see it's making higher highs and lows. All right. So in this instance, what you'll be doing is looking for buy opportunities. Now, again, it just depends on your strategy, your criteria for entry. But again, the rule of thumb is with your stop losses is that if you were doing a buy here, that your stop losses will be below the previous low. All right, because it could still come back down here and go up and still be in an uptrend. All right, and of course the same goes for reverse. So if you had an uptrend, we'll stick to this. Let me just move this along a bit. So you've got an uptrend, and like let's say it's getting to like here, and you think, oh, you know, it's been going up quite well. I'm not really comfortable on getting in a buy on this, so I'm going to wait for a reversal. What you'd be waiting for this to do is, obviously that's your last high there, your last low. You be waiting for price not to exceed this high, ideally, and break this area here, okay? You test. And look something like this. So at this point here, okay, so I've got my dodgy line. So you've got your last lower low, so your last high and low, okay? So prices came up, it hasn't went higher than the previous high, okay? So it's lower, and prices broke down, breaking the structure of this uptrend because it's actually now created a lower low. So all of these lows, higher lows, another dodgy line. I think you get the idea. But obviously now it's coming down this way, it's creating lower lows. And that's kind of what you look for. So again, if there's something in here that doesn't really make sense, please do reach out in the team. There will be more intermediate and more advanced videos on market structure, but hopefully you understood the basics. And also just to add, that if you're obviously looking at price on the bigger time frame, make sure that when you're going down, you keep that in mind, what that overall price is doing, because on each swing, okay, you're going to have many uptrends and many downtrends, okay? So not to confuse you, but as on a day chart, price is obviously pushed up, but if you were kind of to delve into that, you would see price going up, coming down, going up, coming down. So you've got like many ups and downs within this trend. And at this point, you would have the market structure, because now we've got pullback. So if you are trading on a lower time frame, just try and identify, are you trading a correction or are you trading with the trend? So the trend as in, is it going up overall? So you've got your push ups, you've got your buys are in control. So that means if you've got a buy, you're obviously going with the trend. But if you're in a sell on an uptrend, then you're obviously trading a correction, right? You're trading one of these pullbacks.